Social Be Savvy in the house. Going to give us some great information about what's going on in our real estate market and her opinion on the very near future, along with Dustin DeHart, Senior Vice President with Nova Home Loans or Branch Manager. I do a radio show with Dustin every Saturday, Real Estate Live on 840 AM News Talk Radio. Welcome, Dustin DeHart and Ruth Allbrand. This little session we're having this morning. Good morning.
Morning, guys. Thanks for having me.
Well, you're the expert on the mortgages, so that's why you're here.
Yes, and
it's not for my good looks. How dare you?
And needless to say, our industry and life in general has been a little challenging and different than the normal. Everybody's changing the way they do business, the way they communicate, and there's a lot of people that are concerned about what's going on right now. So it's very important that not only do we give the right information to the public out there, but maybe to rest their mind at ease, because sometimes if you know that the future isn't going to be exactly what it was yesterday, but you know it ahead of time, you're a little more comfortable and feel better your business and the future. So why don't we start off with Dustin, Ruth?
Okay. Yeah.
Let's ask Dustin. What do you see some issues in the mortgage industry facing the COVID-19? What do you see the forecast? What's going on here with mortgages?
Well, yeah, it's been a roller coaster to say the least. And it's very fluid, you guys. Every day kind of changes. If we would have done this last week, I'd have been a lot more worried than I am now this week. So that's a good thing. It started a few weeks ago. Basically, all non-QM loans were qualified mortgages. Aaron and Ruth, those are like the bank statement loans, 2 days after foreclosure, stuff like that. Those went away. They're backed by Wall Street. Obvious concerns with Wall Street. They don't have an appetite for them. Look, not the end of the world if we lose some bank statement loans right now. They'll eventually come back. Then the chatter was towards all the forbearance going to start happening, right? That phrase, no good deed goes unpunished, is kind of what's happening right now. And, the Fed does stuff and there's unintended consequences, right? Now, if you think about it, when you're a servicer, you service that loan, right? Before you get the payment, Ruth and Aaron, you send that money to the investor, right?
What if I don't get it?
Good, exactly, right? Now, and a servicer, they have enough funds for the normal defaults or missed payments, but when, half the country or more is going to stop making their mortgage payments for 90, 180 days or however long, right, that presents some issues, right? And then, you got to remember taxes and insurance are due. There's mortgage insurance now. And this is even more pressing for Ginnie Mae loans, which are government loans, Fannie and, FHA and VA loans. So,
are they going to guarantee them?
Well, yeah, they are. And thankfully, look at last week, it was all up in the air, and literally Ginnie Mae servicing went down to zero. So it drove up interest rates, but it also spooked a bunch of lenders, and they stopped lending on the FHA and VA. Now, look, again, there's a lot of rumors. I don't know exactly what companies are doing what. All I know is we're still lending on FHA and VA loans. We did install one overlay, no big deal. We now require 640 credit score for FHA loans. That's the most drastic we've went. I've heard others have gone completely overboard, but we have had some talk from Ginnie Mae, and it sounds like that's going to work itself out. And again, the federal government's going to work this out as well. They're not going to just let servicing crumble. So that's good.
So, can I have a question?
Sure.
So if I'm a servicer, do I have to have a reserve then? What if they don't make the first 3 payments now?
Yeah, well, yeah, they do have to have some type of reserves, but they're not set up for this kind of an event, right? So that's the whole liquidity issue. So that's where the government's going to need to come in and help them out. So that, and FHFA and all of these entities are going to have to figure out, how does this work? If all these people start making their payments, these servicers are going to go out of business, and it's going to be a catastrophe. So one would think that this was going to get resolved, and again, every day we're hearing new information, and it sounds like it will be soon. So hopefully we have some more clerical or clarifying information here by the end of the week, and we can move forward. So that's one of the issues. Then there's all sorts of issues you guys were seeing. The unemployment issue, right? So you guys have done a lot of business. As a lender, the last thing we have to do at funding is verify that the borrower is still working, right? Through a verification of employment. Well, the problem is I'd say 35% of the people we talk to right now aren't employed. Now, where the confusion is let's say you work at Wynn, great company, they're still paying their employees for 30 days, even though the place is shut down. Well, the GSEs still don't, the Fannie and Freddie, they don't consider that actually working, right? It's furloughed. You're getting a payment, but you're not actually at work. Now, it's, the mindset is because, well, what if this extends to 90 days? Is Wynn still going to keep paying? And when they come back to business, you're going to have your normal pay, your normal job. It's all these uncertainties. So if your job's up in the air and you're not going to work every day and getting paid and doing your job, then you're going to have issues at funding. And then that's the other issue that we're seeing. We have a huge pipeline of refinances, and we're trying to get to all of them right now and figure this out for them. So that's the other main issue that lenders are facing right now. It's crazy nowadays, guys. Like literally 2 people yesterday, they contacted me, past clients, wanted to refinance. And my first question to them was, do you still work? Like I never thought that's how I start, a conversation with somebody, but that's the world we're in right now. It's kind of scary, I thought appraisals would be a big issue. I haven't seen any issues with that.
What with what?
Appraisals.
Appraisals?
Yeah. The turn times are a little longer, and I think more or less that's more from just the business. Everybody's so busy. We on a refinance, more often than not, we get an appraisal waiver anyways. And then, on certain products, they are allowing for just drive-by appraisals now, exterior, not on all of them.
Mm-hmm.
And appraisers, look, they got to get a paycheck. They're going to risk it, go in there and snap some pictures if they have to. So that is one good news. I thought that would be an issue, and I'm not seeing it on our end. But again,
Yeah.
I'm not every company. I don't know.
Well,
you still see people refining at this point. Refis are still good.
Yeah, they are. They are. So rates have been all over the map. So that's the other issue that lenders were facing is you guys literally in 3 weeks, we had as much movement in interest rates from top to bottom that we normally see in like 2.5 years, right? Huge swings in volatility. And it's pressing lenders to get margin calls from their warehouse lines, so that, they're cutting big checks, 10-figure checks. And so that's another liquidity issue. So because of that, our rate sheet's not reflective of where our rates should be, but they're still damn low. Now, like I told you, the issues with Fannie and Freddie, or excuse me, FHA and VA, that has pushed rates up. They should be in the low 3s, maybe even under that, and they're not right now. So hopefully that gets worked out. But Fannie and Freddie loans, the vanilla, refinance, Aaron and Ruth, with decent credit score, a good loan to value, those rates are still really low, and I'm still fielding calls every day and saving people a lot of money. But again, it's volatile. I mean, rates are starting to tick back up because the Fed's not buying as many mortgage-backed securities as they were, just to relieve some of those pressures from those margin calls. But rates are going to stay low for a long time, guys. I mean, they don't go down or up in a straight line. It's still a great time to refinance. That's for sure.
Oh, and we yesterday we put Las Vegas put 53 deals in escrow, so
I was surprised.
We're still ticking along.
Yeah,
and out of those 53, Dustin, those are purchases, and I know this is going to be a dumb question because I probably know the answer, but is your purchases, how is that holding up?
Yeah. It's next to nothing, basically. Thank God for refinances, because it would be scary. But because
how many of those
are so low, we're the busiest we've ever been. I mean, that's going to change. Look, we're used to getting a purchase contract about a day, every day, and now we get one about a week. Is kind of what it is, and unfortunately, we're seeing some people cancel on those, and it is what it is. There's a lot of uncertainty with what's going on, and I don't blame them. But yeah, I was surprised that number, Ruth. That's really good in my
Yeah,
opinion.
that's good.
I
Yeah.
was expecting that to be way, way lower than that. So I'm happy to hear that.
Well, and then also yesterday, we had 126 closings.
Yeah.
So that's really good. The day before, we had 81 closings. So March 30th, we had 81. Yesterday, we had 126. So that's about 100 a day, which is about normal for us. So
Right.
we'll see, being that yesterday was the last day of the month, we'll see how the new escrows start opening up for April. So hopefully we'll keep at that 100 a day rate.
Yeah. We'll see. I would be surprised. Would you guys? I mean, well, there's a lot we have to clear through. I mean, I think,
What, Aaron?
I anticipated going down to 50, especially in April with everything shut down. And actually, I'm being optimistic, but I'm pretty confident that I think we'll go down to about 50 closings a day. If we close 1,500 homes in April, I think that's going to be a good number to carry us forward to May and June and July.
Yeah. Well, and like NAR's chief economist, who is Dr. Young, he spoke last week, and he said that across the United States, there is a pent-up buyer's market of about 1 million buyers. And they are the statistics that they take through the National Association of Realtors. And he feels that, yes, we're going to have maybe 30, 60, 90 days of a different market, but then everybody should get ready to do 12 months of business in 9 months, because he thinks the pent-up buying, the buyers will be there, but it is going to take some time. And to that point, Dustin, a lot of people are probably using their savings through this period. And I think that's what's I see may have an impact. But like I was saying this morning, I mean, we're not eating out, we're not spending money. So even though we're using, people are using their savings, they still are saving money. They're not spending as much. So do you have any feel for that? Because you actually talk to the borrowers on a different level than we do.
Yeah, look, the bill was passed, so money's going to start rolling in to people that need it. Thank God. They stepped up their unemployment. They've not only are they giving more on unemployment, they're extending it out. Secretary Treasury Mnuchin, and they've got a lot of money going out to small businesses. Thank God. Billions of dollars, and they're going to keep extending that for SBA loans and getting us through this. But yeah, people are dipping into their savings and doing what they can to survive. The forbearance thing the forbearance guidelines that are going on are going to help people out. So we'll get through it. Yeah, there's just a lot of unknown. How long is it going to take? Going back, that pent up demand, that's what I've been telling all my loan officers. Hey, bunker down, refinances are still there. But when this clears out and people are back to work, you're right, Ruth, we're going to have a lot of pent up demand of people that want to buy a house. And we're going to be right in the middle of buying house season, right, in the summer months. So it's going to be busy. We just, again, we don't know when this is going to clear, how the job situation is going to look. But at the end of the day, it's going to be all right. We're going to do this.
People need to know they need to pay their rent and pay their mortgage. We've had a few people call yesterday that said they can't pay their rent. And here's the thing. If you're collecting unemployment, you're getting more unemployment, and they're giving you money, that money is to pay your rent and pay your mortgage, not to just go blow it on whatever.
Well, good point, Eric, because people think like the forbearance, that's not you to get a mulligan.
You have to pay it back.
Yeah.
Right.
And that's what no one knows. It's bank by bank or service or whatever it is, and it could really slap you in the face when the money comes due, because they don't just forgive that. That either gets tacked on at the back of the loan in a balloon payment, or I've heard some people or some situations where you miss for 3 months, and then 3 months later you got to catch up again. So
actually, that is the rule. The mortgage forgiveness or forbearance is they're going to give you 3 months not to make your payment, but then it's due at 3 months, a balloon payment of all 3 payments. So why are you missing? You're going to have to go now. If you can't catch up, now imagine these servicers that are going to go into loan modifications. Oh my God, that's going to be the next thing. And it's going to be different than 08 to 15 because people have equity in their homes. So they're not going to want to get rid of their house. It's not like they're going to be doing short sales.
No.
Having 100 or 200,000, I might drop 10%, but now we're going to have all these loans that they're going to have to be. I'm not sure how that's going to affect, everything going forward. But I definitely for a fact that those 3 months aren't forgiven, but are due as a balloon payment 3 months.
Yeah. So I guess the point is, if you can make your payment, you probably should, right?
Yes, make your payment rents. Here's the same thing with tenants. So yesterday, Ruth, and we do a lot of property event. Working, they're not paying their rent. Okay, you still got income. You still get unemployment. You might hear that, you can't get foreclosed on 30 days. But what's going to happen is in 30 days in May, a whole bunch of 5-day notices or 30-day notices evicted, and they're still going to have to make that payment. Rent doesn't mean get out of jail free card. You're going to have to pay at some point. So if you have the means to pay it, you better pay it.
Yeah, I mean, and people don't realize what they're putting their landlords and what the position they're putting them into. You know what I mean? I mean, Aaron, we have a personal friend. I'm not going to mention him on this live broadcast, but I'm helping him refinance. He's got like 10 properties, all rental properties. And, he's trying to combine 3 and pay off the rest, basically. And he's worried that, because while you're doing this, we got to verify that he's making his mortgage payments on time. And he's scared that, like, all 10 of those people are going to stop paying him, and he can't afford to pay all 10 of those. And it's going to screw up his refinance. I mean, people don't understand the unintended consequences of what happens when you do these things, So,
So the credit card companies are allowing people to pay lower than perhaps their normal payment is, or even defer payments without hurting their credit.
Yeah.
And lowering interest rates too. So, some of the credit card companies, I think someone told me Citibank is really flexible. I don't know about the other ones, but Citibank has been very flexible.
And that's going to be interesting to see how the mortgage lenders in the future react to the forgiveness, react when you're on the back end, react to, how are you guys going to qualify these individuals? All right, we knew you couldn't afford it then, but you can afford it now, so we're going to still give you that loan. I don't know. You don't even know how that's going to be, right? Because we haven't been there.
Yeah, I don't know how tomorrow's going to be.
You don't have a crystal ball.
Or today, actually.
Yeah.
I know the morning, I'm positive, let's go. I list the home, and then by the afternoon, I'm like, what the hell's going on?
By like 2 o'clock, I'm like, this is ridiculous.
Yeah, so I want to we have some viewers here. Shannon Garcia said that not people have enough reserve, and so the fears are leading people to hold their available funds. And I think the fear is a lot in not knowing the facts, and we don't know all the facts. We don't know how long this is going to last. So, Shannon, I think you have a point there. And then Ginger Jones, let's see, Ginger, where are you? Ginger says, I deal with VA buyers, and they're asking me, is it a good time to buy, or should we just rent?
Yeah.
Well, by the way, before you answer that, Dustin, the forbearance is, and I think you know this, it's not for VA. There's no forbearance for VA, which is
really
crazy to me. Yes, if you call your servicer, no forbearance for VA. Unbelievable.
Well, is that because they're backed by the government, Dustin?
I don't know. I haven't heard that, so that's news to me. I didn't know that. They're Ginnie Mae, so I thought they were on that pool of they're going to be allowed to do that as well. But I don't know.
No.
I don't. Maybe Aaron knows something I don't know, but I was under the impression VA loans were eligible for this as well. Who told you that, Aaron?
A servicer. I called 3 servicers yesterday
Really?
because I wanted to know
Yeah.
all the rules. So when I talk to clients, I can give them.
They specifically said no VA.
Every one of them said no VA. And every one of them was extremely grateful that I wasn't yelling at them because I wasn't for my loan.
I was surprised you got them on the phone.
I was on hold with one of them for 72 minutes.
Yeah, I bet.
For them to tell me, yeah, you could apply for the forbearance, but in 3 months you have to pay it back. And the lady was so grateful that I wasn't yelling at her. And then we had a good conversation about how she thinks she's at the end. Can't believe she has to deal with this, and every single person she talks to is yelling at her.
Yeah, just so people know, the lady on the phone, she doesn't make the rules. She's just trying to help you out.
And then when she told me the VA thing, I go, "Oh my God, I can't believe that."
Huh? That's interesting. I have to dig up some info on that. That's news to me. That's not good.
So here's Jeremy. He says part of the VA funding fee insurance is to cover things like distress. Borrowers can call and request it. I had one approved yesterday.
Yeah, good point.
Hey, what's up, Jeremy? What's up, kid?
So thanks, Jeremy, for tuning in and asking the good questions. And it's good to see you.
Well, going back to the other question, is it a good time to buy or rent, Aaron? I mean, I'll ask you that question.
Well, here's the thing, and I tell a lot of buyers this, in the course of, let's say, 10 years, the market's going to go up and the market's going to go down. We've seen it in our lifetime a couple times. Ruth's seen it 2 or 3 times. It's going to happen. Did we ever expect it was going to be a virus like this? No. But you know what? In 5 years, it could be something else. It could be a war. Who knows what it's going to be? The point I make with buyers is if you're going to buy, whether it's this month, next month, or 6 months, you need a place to live. It's still a great tax write-off. You're not going to have to rent. You don't have to worry about the landlord getting foreclosed on or selling his property. Buy a home. But if you're looking to buy a home to flip it in 6 months or a year, that's always the wrong mindset to go in to purchase a home. So yes, buy a home if you're going to live in it. Do I think the market's going to drop a tad? Possibly, yes, I think it will. Do I also think, though, that when this is recovered, is the market going to spike up like crazy? And like you were alluding to earlier, we're going to do 12 months of business in 9 months.
Right.
100% on steroids, that's going to happen.
Yeah.
Then you're going to be scrambling to buy a house, and there's going to be none. So,
buy a house. We were on a trajectory this year to have one of our best years ever, in my opinion, right?
We were going to hit 330, 340, I thought.
Right? All day long, right? I mean, we were 3 months, month to month of 25 or 30% more sales than the previous year. You know, I don't know what supply was down to, 6 weeks, I think.
Yeah.
Right? You know, and then we eclipsed our pre-recession high of 2006.
Right.
Finally, it took us 14 years to hit that. You know, everything was looking great. Interest rates are low, and then boom, here we go.
Here we
So I don't expect us going up anytime soon. But you're right, Aaron. I mean, you know, if you have the ability to maybe sit out a few months, that might be a good idea. But if at the end of the day, like Aaron said, if you're going to be in the house for more than 10 years or something like that, I mean, does it really matter if you? I don't know. I mean, it's a hard one to answer.
My opinion, you buy a house right now that's $400,000.
Yeah.
Sometime between now and 10 years, that house is going to be worth $350,000.
Yeah. But what if you can get it for $370,000 in 3 months? You know, I mean,
don't get crazy.
You're fine too. So I think you just have to look. Every situation is going to be different.
Yeah.
But you know, there's some nice properties out there, and there's really not that much inventory still. I mean, I know
inventory going up still, Aaron.
It went up a little. There was 5,700 available yesterday.
And why do you guys think that is? People freaked out and they want to just cash out their equity now. Is that what it is?
I think it's an obvious reason. There's less people buying.
Yeah.
Obviously, and people still want to sell.
Yeah.
Okay. Gotcha. Okay, that makes sense.
Our listings are the same. We listed 2 homes yesterday. Looking at buying one today. We have a listing appointment today and tomorrow. So that hasn't really slowed down all that much. But it's the purchases that slow down. So I can see as the inventory goes up, I can see my listings, availability of listings going up. So now, as if you're going to sell your house, more time than ever is as the inventory increases, your home has to look good and be priced right. Don't be priced above the market right now.
Yeah.
And it better not look like crap either.
Well, Aaron,
guess what? If
yesterday,
you're a buyer, though, you can probably get some closing costs nowadays. Right?
I'm guessing you can get a few bucks. Yeah.
So Aaron and Dustin, yesterday on my 9 o'clock Be Live, we talked about doing virtual showings and getting an app, well, even like FaceTime with a potential buyer. And you can walk through the house from your car all the way through the house, and you can have a conversation with that buyer while you're showing them the house. And, you know, if it's occupied, the seller can, you know, leave the home for the social distancing. So we can still show homes and we can still engage with our buyers through social media. And there's never a better time right now than to be to get techie, if you will. If you think using a phone to take a video is techie, you better step your game up a notch. So anyway, so what we're going to do, Aaron, is we're going to go through a couple vacant homes and show agents how you actually do it. We're going to do that later this week. And I want to give a shout out here to Katie Lance. She's my social media mentor. I started with Katie eight or so years ago, learning social media from her. She's fantastic. And thank you for watching. We appreciate it, Katie. Awesome. And just so everybody knows, I do a live show every day now at 9 o'clock. And I'm trying to keep the realtor community connected so that, you know, we can talk about our fears and perhaps overcome those with facts that people aren't aware of.
Yeah. So tomorrow we're doing our second. We have actually, I'm looking at my calendar. We have two virtual listing appointments tomorrow, where we actually do it through Zoom, and we do our virtual presentation, and then that 3D Matterport virtual tour that we do is more awesome. So people are going to be able to see that, and then actually people could purchase through their contingent on the one view going to the property. So I could see a lot of that, you know, happening in the future, more so now, but you know, it'll die off eventually. But I could see a lot of that social distancing happening in all of our fields that we do. Right. Online applications, more online viewings, more online everything.
Yeah, I think everything changes, right? I mean, the whole world's going to change from this.
Well, it's going to change for the better. And you know what it's really going to do? It's going to give us a better cutting edge against the iBuyer platforms. And because the sellers and buyers are going to get used to more virtual showings and like you said, virtual listing appointments and things like that. So I'm really jazzed about, you know, if you can find any good in what's going on, that's a good thing. That agents have to get their game stepped up a notch. And also it's a great time to prospect your database and ask people how they're doing. And you've got to be disciplined right now and not just sit back and act like this is a vacation. This is a time to get to work.
Yeah.
Yeah. Me and Jackie.
Those iBuying companies pulled out. Are they still in? I heard they're kind of taking a little break.
You know, I've heard rumors, but I haven't seen any facts. Aaron, you have more factual data.
Zillow has stopped purchasing homes. Wedgwood is still purchasing homes, and a few local investors. I think there'll be some opportunity there still, because you're gonna have to buy. You're gonna have to buy lower now, just like in 08 through 15. You have to buy lower and sell lower. So I was gonna say, like, I'm in this room and my wife's in the other room, and last night we had virtual sex. We made love virtually last night.
Oh. No.
I just wanted to throw that out there.
Oh my goodness! Oh my goodness!
Hey, we're all adults. Come on.
Aaron, I'm calling you later. I'm gonna hook up with that. All right.
No, I'm a straight shoot as far as virtually.
So Ginger had this question: how many months of inventory does Vegas have right now? We have about 1.5 to 2. And Ginger, that's going to change as we see. If you watch me daily, I'll tell you how many things are going under contract. So as we progress through April, that number may change, as we talked about earlier. We may go down to 3 or 4 months of inventory, but when everything comes back online, then, like we're saying, get ready to do 12 months of work in 9 months. So right now it seems it's a little higher, right, Aaron? It was in the 4,000s. Now it's up in the 5,000. So
yeah, 5,700 available, 7,000 with condos and townhouses, but still in a normal market.
Yeah.
Me and talk about this. I think a normal market's going to be 10, 11, 12,000 homes on the market. Even if we get there in 4 months, when we do 12 months of business in months, look out. That's not going to be enough.
Right. So do y'all want to get together next, what is today, Thursday?
Yeah.
Is it?
Yeah.
It's
whenever you want. Together next Thursday at 8 o'clock and see where we're at?
Yeah, be awesome.
Yeah.
Okay. We'll see everybody with Dustin and Aaron next. We're going to be there next Thursday at 8 o'clock. And we'll be talking about these things, and we want your experiences, and we love your comments, and we love all the attention we got today. So everybody, we love you. Have a great day. Be safe. Be healthy. And bye.
Thanks, Ruth. See ya.
Bye-bye.